Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. So in today's episode, we're going to be talking about Carnival Cruise. We're going to be doing a Carnival Cruise stock review. So I hope you guys enjoy it and I hope you guys learn something. Now before we jump into the episode, right now we're doing an AirPods giveaway. So it's super simple on how you enter. All you gotta do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you guys do that, you guys will be entered in to get some free AirPods. So it's super simple. And I hope you guys enjoy it, and I hope you guys enter for the giveaway. Alright, so let's roll the intro. Let's go. Bam! So now the very first thing that you guys have to understand with Carnival Cruise is the stock's fallen roughly 73%. And obviously there's a couple of reasons why it's fallen so much. The very first one is this virus going around. We all know this virus going around is making people not being able to go to work, travel, and do things that they normally do. So all the people that would normally go on cruise lines, they're not going. So that obviously made that stock fall a lot in value. Not to mention a lot of people actually that were on the ships during this time had to be quarantined for 14 days on the ship, and they couldn't leave and they were kind of just stuck there. In my personal opinion, I think that was the wrong way to go about it. I think they could have been transferred to a hospital and it would have been a lot better that way. Now when you guys look at a stock, especially in like a recession or a falling market, the very first thing you have to look at is how much cash they have. So if you're a company who has no cash and you have a high expense, obviously you're gonna have to figure out a way to get money. So what Carnival Cruise and a lot of other cruise lines started doing is they wanted to ask the government for a stimulus check. So for those of you that don't know, we're probably gonna be getting a stimulus check of around $1,000 to $1,200 and then $500 per kid. So these companies wanted to have a similar scenario. So they asked the government for stimulus money and they said no. So obviously that made the stock fall even more. So for those of you that don't know, the stock has fallen roughly 73%. You know, what's your opinion on this? So the very first thing we gotta do is look at the cash. So right now, Carnival Cruise Line, they have roughly $518 million in cash. So that seems like a lot of money, but the next thing that you guys have to look at is how much expenses that they have to pay. The annual operating expenses for 2019 were $17.5 billion. Yes, billion with the B. So if let's say they cut their expenses in half, they still don't even have enough money to get through the quarter. Now realistically, they're going to be able to cut their expenses a lot more than half. I'm just giving you guys an example of really how much money they would need to actually stay afloat, no pun intended. So obviously for 2020, we can almost guarantee that their earnings report's gonna be pretty bad. You know, in 2019, the annual revenue for this was $4.7 billion. That's how much total profit that they made. And we can almost guarantee in 2020, no one's traveling, no one's going on cruises, and their expenses are very, very high because these boats still need repairs. They still, you know, things break on them, so their expenses still are going to be pretty large. Now, another thing that most people are going to look at is say, Carter, they still have their dividend. Why don't you invest in this company for the dividend? If you invest in it now, it's going to be like a 16 or 17% dividend. That should be raising red flags like crazy. Now, the reason why is because this company, they don't even know if they have enough money to get through the year. So why do you think that they are going to pay you? Just like Ford did, just like a variety of other companies did, they cut their dividend. I will not be surprised if we see these cruise lines cut their dividend, just because they don't have a lot of cash. And I think the last thing that they're thinking is, we got to pay the investors. So I do think they could save a lot of money just by not paying their shareholders. That's my personal opinion. Now the next thing we got to do is go ahead and turn to the computer and look at the stock chart, support, resistance, and where I see the stock in the future.
Alrighty guys, what is going up? We are up and loaded here on the TD Ameritrade's Think or Swim platform. We're going to be doing the breakdown, looking at support, resistance, overall trend lines, and pretty much everything that you could possibly imagine about the Carnival Cruise Line. So we have Carnival Cruise up and loaded here. So as you guys can see, we have CCL, that's the ticker for it. So really the stock's currently trading at around $8.19. It did find some support there, but we'll talk more about that later. So looking at the stock here, you guys can see this is the same price you could have bought this at all the way back in the 90s. So for those of you that are saying, well, guys, the upside potential is huge. I mean, we'll get into it. So this stock all the way IPO'd in the 1980s. It did have some nice little volume and some nice little buying pressure. Got slammed back down. Did find some nice resistance all the way up here at 58. Sold off all the way back down to 15. It did trade in here for a couple of years before we just had this nasty, buying in this nasty bull market. Everybody was making money. All the companies were doing great. And then the virus came around. And then we went from highs at 72.70, crashing all the way down to $8.19. So as you guys can see, let's go ahead and zoom in here. They did pay their dividend all the way back in February. So they paid 50 cents a share, which is quite a bit for a stock that was, trading at, $40. And then we had this nasty fall. Really it did hit resistance at around 51 and then just got slammed back down. So the biggest thing right now with this stock, that's the thing that everybody wants to know, should you buy it? And you have to look at a couple of things, okay? The downside potential is huge with this company. The cash flow is very limited. No one can travel and this company is just having a hard time making money. So looking at it in the past 20 days, so let's change it up a little bit. So the past 20 days, this stock went from $30 and then hit $7. Okay, so it lost. It's already down around 73%. And then it did find support. It found support at around $7.60, came all the way up, hit some resistance at around 20, 1922, and then just been slowly getting sold off here. Now, if you guys look at it, the past 2 days, look at this. We've found this stock finding support. It's just been consolidating, which was, a pretty cool thing. The reason why I think it's doing this is for a couple of reasons. I think one, it did find support right around here that when it hit it once. So now it's having a harder time breaking below it. People are going to continue to purchase this stock as it falls. The same thing people did with Blockbuster. Same thing people did with BlackBerry. As the stock fell, people continued to buy into it, and then the company went bankrupt. And there's a very similar situation with this. So if you guys buy in, to Carnival Cruise, what I would recommend doing is, if you're going to put money into it, put about 2% of your money in it. And 2% of the money you normally would invest. So if let's say you're going to spend, $1,000 and pick up some stocks and bonds and, index funds, maybe put $20 into a riskier company like Carnival Cruise. And right when you buy these shares, you have to have the mindset is you already lost your money. And I know that might be hard for you guys. And the reason why I say you already lost your money is because this company could very well go bankrupt. The expenses of this company is very large, coming in at around $17 billion for total expenses. Now, the total cash on hand that they have is around $518 million. So if they cut their expenses in half, so they laid off half their employees, they laid off, people, they cut expenses, that means they still don't have enough money to get through the year. And so realistically, yeah, I do think that they can cut more than half just because they're a travel agency and a travel company. So they, when the ships are docked, they only just have to do the normal maintenance on them, stuff like that, compared to the gas going out, the food, the paying employees. But realistically, do I see this company ever coming back up to, $40? Do I see it as a possibility? And I answer this with a grain of salt. I say yes. The reason why I say yes is because I think that this company is very large. It is one of the largest, if not the largest, cruise lines in the world. And so, do I think they'll go bankrupt? Probably not. I say that they just got financing to restructure their debt, which was very nice. They got cut out of the stimulus money for businesses, which kind of sucks. But when you're a large company like this, that's what's expected. They expect that you have millions or billions of dollars in cash, like Apple. Apple has billions in cash just sitting there. But they got cut out of the stimulus money, and I think once this whole virus, kind of passes over, it's a matter of time. I think in the next year and a half, the stock will bounce and we'll see some profits. And so that's why I say risk a little bit. If you look at like Delta Airlines, ticker symbol DAL, it's a very similar situation. If we go ahead and pull up the max available, or just the past 3 years, look at this. Trading at $63, nothing in sight. Everybody was doing great. Boom, 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 all the way down to $21. So when we say all the companies are going to go bankrupt, probably not. It's going to be who is the largest, who has the most cash, and who has the most assets. I think Carnival Cruise is a perfect example of that. And I do think that this stock could possibly even hit $3 before it pushes its way back up. I think that this whole thing's going to blow over. People are going to start going back on cruise lines, and everyone in the stock's going to push back up. I think that's what's going to happen. Looking at it on the RSI, look at this. Trading at an 18. It's never traded that in the past 3 years. So do I think risking a little bit of your money for it? I think that could be a possible good move. I know a lot of people will say, oh, you're risking your money. That's why I'm only saying 2%. Buying 2 shares, if it comes back up to $50, that you risked $20 to make $100. I think that's a perfect asymmetrical risk.
So I hope you guys enjoyed the episode, and if you guys did, make sure you guys hit that subscribe button. We'll see you guys tomorrow in another episode. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your day. Take care, guys. Have a good one. We'll see you tomorrow.